Hey there, investors. This is Pat Walker from Mission Winners, bringing you our midweek market wrap-up. Buckle up, because we've got a lot to cover from the past 3 days. Monday kicked off with a classic case of market indecision. While the Dow Jones Industrial Average managed to eke out a new record high with a 0.2% gain, its siblings weren't feeling so bullish. The S&P 500 dipped 0.3%, the Nasdaq Composite took a 0.9% hit, and the Russell 2000 barely budged with a 0.04% loss. Now, why the long faces? Well, it seems like investors were taking a breather after last week's rally, which was fueled by some dovish comments from our friend Jerome Powell over at the Fed. Plus, with Labor Day on the horizon, Wall Street was already dreaming of barbecues and beach days. The tech sector felt the heat, with Nvidia leading the retreat. The chip giant dropped 2.3% ahead of its eagerly anticipated earnings report. But let's keep things in perspective, folks. Nvidia is still up a mind-boggling 155% this year. Not too shabby, right? Oil was the day's dark horse, with crude futures jumping 3.4% to $77.42 a barrel. Geopolitical tensions in the Middle East and production hiccups in Libya were behind this surge. Tuesday saw our major indices shake off their Monday blues, but only just. The S&P 500 and Nasdaq both inched up 0.2%, while the Dow basically flatlined with a 0.02% gain. The Russell 2000, however, decided to play contrarian and slipped 0.7%. The PHLX Semiconductor Index flexed its muscles with a 1.1% gain, partially offsetting Monday's losses. In the mega-cap arena, Apple climbed 0.4% after announcing a new CFO, while Eli Lilly matched that gain on news of a discount program for its weight loss drug. Oil decided to give back some of Monday's gains, with crude futures sliding 2.3% to $75.61 a barrel. Meanwhile, over in the bond market, we saw some interesting moves, with the 2-year yield dipping and the 10-year yield ticking up slightly. Now, before we dive into Wednesday's action, I want to take a moment to connect with you, our wonderful listeners. If you're enjoying this market wrap-up, please hit that like button and subscribe to our channel. Got questions or want to share your own market insights? Leave a comment below. Your engagement helps us create better content for you. Now, let's get back to the markets. Midweek brought a case of the nerves to Wall Street. The S&P 500 shed 0.6%, while the Nasdaq Composite took a more substantial 1.1% hit. What's behind this sudden bout of pessimism, you ask? 2 words: earnings anticipation. With Nvidia's earnings looming large after the bell, investors decided to play it safe. The chip sector as a whole, measured by the PHLX Semiconductor Index, tumbled 1.8%. But the tech tremors weren't confined to semiconductors. The entire information technology sector was down 1.3%. Now, let's talk about the day's biggest loser, Supermicro. This stock took a nosedive, plummeting 19% on news of a delayed annual filing. Ouch. But it wasn't all doom and gloom. The financial sector managed to eke out a 0.3% gain, with bank stocks showing some resilience. And here's a fun fact for you: Berkshire Hathaway briefly touched a $1 trillion market cap today. Warren Buffett must be smiling. So where does all this leave us for the year? Well, despite this week's wobbles, we're still in pretty good shape. The S&P 500 is up 17.2% year to date, with the Nasdaq Composite hot on its heels at 17%. Even our laggard, the Russell 2000, is showing a respectable 8% gain for the year. Remember, folks, investing is a marathon, not a sprint. Keep your eyes on the horizon, and don't let short-term fluctuations shake your long-term strategy. This has been Pat Walker for MissionWinners.com.